a lot of deposits at the 9-10% annual rate in December. A lot of bankers panicked at that time because of the evaporation of credit from the global markets and a lot of load coming on to the Indian banking system. People probably miscalculated the kind of return of liquidity. Liquidity returned with such ferocity, partly because or largely because of action and largely because of RBI action, but nevertheless they were all saddled with high-cost deposits. Some, like Bank of Baroda, have played it better and not gone in for too much of high-cost deposits. Well, actually what you can see on your screen is the management of Dabur. We will, okay, can we speak to him? All right, sir, can you take us through your numbers? Mr. Dugal, can you hear me?
Yes, I can hear you.
Okay. Mr. Dugal, if you can take us through your numbers, your margins have quite distinctly improved. If you can take us through what has been the raw material cost and what has been the margin picture?
Well, the material cost has declined from 49% in the same period last year to 47.2%. So obviously the deflationary impact has contributed to the margin improvement. At the same time, we have invested higher amounts in advertising and promotion, and there's also been a higher tax rate consequent to the increase in the MAT. But despite that, we've been able to grow profit at close to 30%. A lot of that is on account of the larger margin profile on account of lower raw material cost.
Sure. Mr. Dugal, now if you could touch upon the top line, coming pretty stellar at about 20-odd%. Is this a run rate we can look forward to going forward? And is this primarily a volume-based led growth, or have you increased your prices throughout the quarter? Is it more realizations?
No, it's significantly volume driven, and that's the good part about this growth. Out of this 22% which you see, 16 is on account of volume and 6 on account of price. Now going forward, this is a pretty aggressive rate, so we may not be able to achieve quite this level of growth. But I'm still confident of achieving growth in the high teens.
How would you expect the margins to pan out, Mr. Dugal? How are the raw material prices looking to you in the next couple of quarters? You may have some idea of how the monsoons are panning out. Do you expect you will be able to improve margins at all?
Improvement over current levels, unlikely. Whether we'll be able to maintain margins at current levels, we think so. At least for the current quarter, we have covered all our key raw materials, so we have high visibility about margins, and they look good. Going forward, third and fourth quarter, I think it's less clear. A lot will depend upon the inflationary impact consequent upon the monsoons and oil prices. But I think while there may be some compression of margins in the third and fourth quarters, the aggregate margins for the year would be significantly ahead of last year.
What has been the growth from your international business this quarter, and going forward, what percentage of your revenue profile will come from there?
21% of our growth is from overseas, and the growth this quarter has been close to 50%. Part of it is on account of translation gains, but even if you take if you don't account for that, the growth is 35%. So the growth in our international business is somewhat twice that of domestic, and the outlook again seems to be pretty positive for the year. But what we will lose out on going forward is a little bit on currency, on the translation gains consequent to the currency shifts. But if you take the core growth in terms of revenue and price, that would be still pretty aggressive and definitely much ahead of India.
Can you take us to your retail venture, Mr. Dugal?
Yes. We've been cautious in expanding the retail venture. We've been engaged primarily in rationalization of stores. We've been closing down some unprofitable stores. At the same time, we've been in a calibrated manner opening new stores, but more on a revenue sharing platform so that the stores break even very quickly. I think that's what the plan is. As in when we see a store which is almost guaranteed to break even very quickly, then we'll open it and we'll do a calibrated increase. The realty environment is still pretty uncertain, but it's getting a little bit better. So I think the outlook for retail today is a little bit better than what we saw 6 months or a year ago.
When does the consolidation with Femcare get completed?
We consolidated 6 days of June, which was of course a very small number both in terms of revenue and profit. So you'll see full consolidation from the second quarter onwards.
Prognosis for Femcare in terms of growth?
The Femcare growth will be not very high this year because we'll be investing very significant amounts in terms of building the brands and rationalizing the portfolio. But we are really looking at substantially higher growth compared to where we are today the next year onwards. So this year will be a year of investment. We'll see growths which are moderate, but on the back of very high investments in terms of advertising, promotion, brand building, capability building, etc.
What exactly are your losses at this point in time on New You?
Current year losses would be in the region of 2.5 crores. We hope to cap the losses at around 10 to 12 crores in the current year. So it's not a significant amount of loss, and I think we've achieved a lot over the last few months in terms of rationalization of the business and to stop the bleed from accelerating.
Will you be looking at more candidates like Femcare? Will we hear of more acquisitions before this quarter is out?
Not before this quarter is out. I think that's too soon a time frame. But I think acquisition remains pretty much on top of the agenda. We're still generating a lot of cash. We have 350 crores of cash in the book. So I think we are open to the prospects of acquiring brands, and we'll be perhaps looking a little bit more outside now because we haven't done any acquisition overseas, and I think that's a gap which we need to fulfill. Acquisition could happen, but it's hard to set a time frame to it.
All right, one final question. You said your advertising costs were significant this time. Will you be maintaining this kind of an investment in advertising? And when do you see this paying off? You said high teens revenue growth in this year, isn't it? Will your advertising expenses generate better thereafter?
It could. I think it all depends upon the environment and how the monsoons pan out, the economic growth, etc. A lot of our growth has been driven by the rural economy, so that's very important for us. But I think we are hedging against any deceleration in terms of the economic growth by investing significant amounts when we can afford it, because so we are taking advantage of this margin expansion to put into play new products which will serve us very, very well for the future. But going forward, the A&P ratio, which were a little ahead of 15%, would taper down a little bit. But we still expect to spend more on A&P than what we did last year.
All right, Mr. Duggal, thank you very much for joining us with all those details.
Thank you.
That was a good set of numbers from Dabur. In spite of good advertising investments, the company has turned up with better margins and expects high teens growth in the full year in terms of revenues. But Ashwin